Hey everyone, in this video, I'm going to bring you one dividend stock yielding 9.8% that I think is an excellent buy for passive income investors for 2024 and beyond. Really, it doesn't have to be just a one-year investment. You can start by investing in it in 2024 and then hold it for the long term. So let's see what this dividend stock is, why I like it so much, and why I think it makes an excellent addition to passive income investor portfolios.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the stock that I am talking about here is British American Tobacco, offering passive income investors a dividend yield of 9.83%. That's a robust dividend yield, to be sure. That's more than double the yield you can get on a 10-year government bond right now, which is less than 4%. It's hovering around 3.9% as of this recording. So it does offer passive income investors a strong dividend yield. But let's look a little bit more deeply into this investment to see why I'm recommending it as a buy and why I think this is a good investment despite the very high dividend yield. Sometimes a high dividend yield could signal that it's not a good investment because the price is down and there's a dividend cut imminent. I don't think that's the case here. So in their latest half-yearly report that came out on July 26, 2023, remember British American Tobacco only releases 2 reports per year, one in July and then one around January. This company is a little bit different than those that deliver quarterly results. And when it delivered its results, revenue was up 4.4%. With new categories, revenue was up 26.6%. Revenue from non-combustible products are now 16.6% of group revenue. That's up 180 basis points versus the prior year. So if you're thinking British American Tobacco, it's a cigarette company, it's going to die in a couple of years, that's not going to be the case. It's transitioning from combustibles, cigarettes, to non-combustible products. And so maybe that new non-combustible product is not as profitable as the combustible product, but British American Tobacco is not going to zero anytime soon, especially because cigarette consumption is not collapsing, it's decreasing, led by a lot of government regulation and taxes, but it's not collapsing. So British American Tobacco has some room to go here, and it's delivering strong profitability, which I will highlight as well. I mentioned that the company is transitioning, right? It's got 24 million non-combustible consumers, 24 million, and that's growing fast, right? Net cash generated from operations increased by 4.8% to 3.4 billion euros. Borrowings decreased by 6% to 42.17 billion euros. The company does have a lot of debt, but when you look at its cash flow from operations, 3.4 billion for the half year, that means it has enough cash to support the debt. It can, over time, reduce this debt balance, which it is doing. It's reducing this debt balance over time. Now let's look at the company's longer-term profitability. British American Tobacco demonstrates economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from $100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, look at this phenomenal growth here from a operating profit margin of 35% all the way up to 61.6%. There's only one company that I know of that has a better operating profit margin than British American Tobacco, and that is Visa. So you're dealing with the best of the best here in terms of profitability in British American Tobacco. The risk is that, of course, this profitability, the longevity of the business model in its current form, not long lasting, it needs to transition. And so this profitability is at risk. But while it persists, boy, is it profitable, and boy, is it generating a lot of profits for shareholders in the meantime. Similarly, if you look at British American Tobacco's cash flow from operations, 37% is a solid number. Out of every $100, out of every $100 in sales, I should say, $37 is turning into cash flow. That's a good conversion rate. That's a good conversion of sales to cash for any business, and one that's good for British American Tobacco, and especially good for passive income investors looking for dividend yields, because this is cash and profits that can be used to pay dividends. They can be used to pay down debt as well, right? And when British American Tobacco uses its cash to pay down debt, that reduces its interest expense, which leaves more cash to pay more debt or to pay more dividends. And it can have that positive virtuous cycle for several years, because the company's this profitable even with that high debt burden. Remember, we looked at its debt balance, $42 billion in debt. Okay, so that's generating a lot of interest expense. The more it pays down this debt, as it did in the most recent quarter, it reduced it by 6%. That reduces the interest expense, which will leave more cash flow, which it can then use to pay down more debt, which will reduce the interest expense even more, and so on and so on and so on. That's years worth of opportunity here for British American Tobacco to reduce that interest expense, increase cash flow, pay those off as dividends, use some of that to transition the business into non-combustibles, and sustain and extend its life cycle and deliver profitability longer term. Finally, the stock is not expensive. In fact, it's rather cheap, trading at a forward price to earnings of 6.273. It's one of the cheaper stocks you can find in the stock market, especially when it has an operating profit margin that high. You'll scarcely find this combination. And this is why I'm recommending British American Tobacco as an excellent stock for passive income investors to buy, even though it's in a declining business and it's in a major transition that could affect its cash flow longer term. I think the valuation, the profitability is exceeding the risks from the debt and the transitioning business. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.